Thanks for the kind introduction, Dan. Appreciate it. Today, my focus will not be on specific indicators. My focus will not be on selling anything, simply because we don't sell. We will invite you to a 1-week open trial. It used to be free, but we noticed there's a lot of people are abusing the trial. So it's a $1 just to know who you are. We open our books in front of you. I mean, not the trading, not the accounts or anything, but we show you exactly how we trade. We take trades on the chart trader in front of you. We are very detailed, okay? But we are offering 5 days every month. It will start Friday, so the 5 day starts Friday. If you want to click and join us, it's only $1. You don't have to buy anything as long as we know who you are. This thing started just now. They're charging $1. In the past, it was open all the time. And that's basically how we get people to join us. They see what we offer, they ask questions for a full week, and then they make a decision afterwards. So today, what I will focus on is yes, you can break away and become an independent trader. We'll start with the basics of how I started trading, what I looked at, and how I improved myself, and what do I do on a daily basis. Okay, the website is traderinstitute.com or globaltraderinstitute.com. If you go to contact us, you will have us. You can contact sales at traderinstitute.com. Jay receives those emails. Jay is our Asian session moderator. He teaches our students. They draw levels overnight, so they are ready for the next morning. They do Asian session from 8 to 9 or 8 to 10, I think now. I'm not sure the timing. Sometimes it's 7:30, depending on the season. The team, it's myself, it's Jay, and Jay is specialized in basically taking care of students' questions and drawing levels, preparing them for the next morning. And he's also with me in the morning session as well to help and support. Eugene is our specialist in mainly options. He also helps Jay in the Asian session for drawing levels for forex pairs. The strategy that we use is based on volume profile, and throughout this session you will know how important it is to learn volume, to understand it. The moderator ahead of me, before me, said something very important, which I really liked. He says he would rather teach people how to trade. Yes, it might sound like a broken record, but it is true. You have to learn how to trade. You have to take trades on your own. You have to be responsible for your own trades. Otherwise, no matter what I do, as long as if you don't learn what I do, then there's no point of just following my trades. I look at least 10 to 15 different instruments. Sometimes at a glance, I would know where the direction is. I will take a trade. Sometimes I have to wait for a good entry point. Okay? So let's start slowly, and we will build on what I just said. Slowly. Okay? Let me just grab my questions here. Notes. Global Trader Institute. The strategy is applicable to futures. I trade futures. Options, I don't trade options, but Eugene calls a lot of options trades in the room, depending on the same strategy, same direction that I choose for the day. I'm very heavy on forex trading too. We have students who trade stocks and ETFs based on the same methodology. You don't have to trade them. You can use the options to trade those as well. And I'm very heavy on CFDs. I love CFDs. Okay? But volume to knowing this is all based, the base of everything is volume. And I'll give you some examples as we move forward. How many of you are familiar with this? A lot of you are familiar with this, right? It's a tape. It's a volume, it's a bid and ask ladder. A lot of people are familiar with this. I was one of the first people who actually tried to understand what is the bid and ask ladder. In 2004, 2005, I started this. In 2006, I dissected this to a key. I dissected this to the tick, and from that, I extracted a very important indicator that we use to date. I don't depend on this anymore, and I'll show you why. Just be patient with me. But there's something important within these numbers that gave me an indicator called the price magnet indicator. If you see those numbers, let me just give you the actual, this is, let's say, the ES. See, this is an ES chart, and this is the bid and ask bars, 15-minute bars. Okay, you see each bar is buying and selling contracts. So buying, selling, and there's numbers here. Depending on the number of the contracts, you see the heaviest sells are here, for example, and sometimes you see the heaviest sells are called point of controls. Now these things, to some, they try to discover these things, trying to understand them, try to trade them. Please don't, because you cannot make sense out of this. You will not understand it. You cannot trade based on one bar or these numbers. However, there's a certain thing that I discovered, which was a formula between the bid and ask. I have a physics degree, so I love math. I love numbers. I started drawing numbers. Long story short, I discovered a formula that when that formula happens appears between the bid and ask, the numbers, the price goes back to that number, especially when you have multiple of these bars giving you the same number. So we call that the price magnet. However, let me show you how we benefited from this with time. If you tell me that, yes, I understand the bid and ask ladder, which is looking at one bar, then you tell me you're basing your own all your trade or your money based on a 5 or 15-minute bar. What we look at, we don't look at this bid and ask anymore, not at all. We look at the volume associated with it. See the volume associated with it. Now look at the volume that is associated with it. It's only this much. Look at one bar. This is one bar, 15-minute, for example, and look at the volume associated with it. Is this enough for you to base or to risk your account with? Is this enough volume for you to base or risk your account with? Of course not. So why don't you bring another bar? Why don't you bring more bars? And all of a sudden that, oh, sorry, never mind. All of a sudden that bar is neglected. You're looking at volume profile. Okay, this is a very small example. This is not actually tradable volume profile because it's only a few bars in the chart. However, the way we look at the market nowadays, for example, I'll give you the Dow. Okay, look at the Dow. This is a daily Dow chart. It goes back 1,500 days or so, and I look at the volume profile. Look at the volume profile on the right-hand side, please. Okay, and look how the volume profile decreases and increases. I'm trying to build you up towards what's coming next, so just pay attention to what I'm doing next, okay? Well, what I'm doing now. So you see how the volume profile is increasing and decreasing according to what? According to how many bars you have inside the chart. So the volume profile dynamic, and it's reading the volume. See how look at the right-hand side, the volume, how as soon as you bring the charts from the left, candles from the left, look how the volume associated with it appears. Look at that. Okay? So now, looking at this gives me a general idea of what the market wants to do. More importantly, it gives me an idea of what the market does not want to do. Sometimes it's important for you to wait for proper opportunity, proper entry. And then you scale down from one daily to the hourly, and then to the shorter term, and then to 1597, and then to let's say sometimes I do as low as 233 tick chart. And as you see how the volume profile shows me ideas. However, if you're looking at the tape or the bid and ask ladder, as we said, for example, this is what we said here. If you're looking at the tape, one bar, these numbers do not give you anything. And there's an example. Look at the volume profile associated with just a couple of candles or a few candles. Is this enough volume profile to see the market? Absolutely not. Now, there is a way of reading the market. There's a way of understanding the volume profile. I discovered things in the volume profile that is different than the market profile that everybody is trying to understand. Market profile is very vague. I don't understand it, and I don't think a lot of people understand it either. It's a lot of numbers. Volume profile, however, we call it mini market profile. I started this in 2006, and I started calling it mini market profile, MMP. Mini market profile is something that you put on the side. A few platforms support that, including Sierra Charts and NinjaTrader. And you will learn, once you learn this, there's no looking back. Okay? Now, next. Looking at the tape, and I'll cover that subject later. Let's look at the importance of the volume profile. Here's where the excitement comes in usually. When the market moves, let's say up or down, and you want to trade it, what are some of the trading styles you have? I will just continue. A lot of people will use technical analysis, including Fibonacci's, including including pivot points. What else? What else do we have that people use? Some of the people use. Risk, not support, resistance, etc. Breakouts. So let's assume, and let's just assume that you have levels, a level here, and this will open up, this practice will open your horizon, and you will understand why I am so insistent on volume profile, because it is exactly how I'll explain it next. Some of you will have a line here. They will say, for example, this is my 38% retracement on a Fibonacci. Another person would say, there's 50% retracement. 50%. And somebody else will say, no, there's 62%, etc. Okay? And this is just an example. Now, what to do? Are you going to take a trade from here? If you take it, what's your stop loss? What about if it takes your stop and then move up? You will say, oh my God, 38% works. I just have to give it a bigger stop. So next time, You'll give it a bigger stop, it will come to 50%. Oh, next time I'll take 50% because it stopped me. I took a stop loss. Next time you take a 50%, it might not get it there or break it. So it is a 50-50 at best. Okay, I know because I was specialized in Fibonacci and I can prove it to you. Go trade Fibonacci's. Okay, you can, but hold on. Okay, you can trade Fibonacci's, but hold on. The next step is when the market moves, it leaves prints behind it. And these prints are very obvious, just like I mentioned. Let's look at, for example, the NASDAQ. Let's look at a small chart for range NASDAQ. I'm not trying to bash anybody, folks. I'm not trying to say anything about any trading style. This is my trading style, and we offer free or $1 trial for a week. You can come and see us trade right in front of you. We trade CFDs, Forex, futures, etc. However, this is, for example, what I see in volume profile. And these prints are left when the market moves. This is volume, true volume. So when the market moves, it would leave volumes. And the volume will be a couple of, the volume prints will be in a couple of ways. One of which will be continuation levels, C, and the other one will be rejection levels. So we have two ways of reading the market, continuation and rejection. Whether you're looking at a small frame or large frame, that's something also you will learn from me because I don't like small frames. I don't like scalping. I started as a scalper, but I don't like scalping anymore. Therefore, I will take 2, 3 trades, 4 trades a day, and I'm done. So continuation levels, we will mark them as squares. When the market moved, it left a continuation zone here, and then it left a rejection zone here, and another continuation zone here. So we have continuation, rejection, R, and continuation. Now my next question now to you is, knowing this is a continuation, are you going to take a short from here? Look where we are. Look where we are. We are in the continuation zone. Are you going to take a short? Of course not, because you are inside a continuation zone. So personally, I will leave this alone. Unless I am long from here, I'm going to leave this alone. Let's assume that you have a rejection here. Sorry. Oops. Let's assume you have a rejection level here, R, and you decided to take a short trade from right where it is. Or maybe not. You decided not to go against the trend, although the trend's interpretation is not always higher highs and lower lows, which I'll try and explain soon. So you decided to wait for it to come down. Are you going to trade long from 38%? Absolutely not. Look where we are. We are inside a continuation, and believe me, this is how you will understand the market completely. This is how I will make you understand the market. Once you learn how to set up your charts the way I want you to set them up, you will see the market that way. You will not take a trade from here, because if you take a trade from here, there's no, I mean, most likely you'll get stopped out because you are inside a continuation. Are you going to take a trade from 50%? Still not. So I wouldn't care about the 38 and 50%. What I will care about, I'll care about this here. This is where the continuation ends and rejection starts, right? So I will take a trade from here. Now, I have saved myself a stop loss here and a stop loss here, and I'm taking a trade here. Now, once you learn this, literally you will be able to find out how accurate or how probable that rejection is. It could be 50%, 60%, 70%. I don't take trades unless they are 70% or higher probability. And believe me, okay, I'm not taking this, I'm not saying these words out of my pocket. Come to the trial and you will see. Sometimes it will take me a whole day to find couple of trades, 3 trades maybe. But unless they are 70%, I don't take them. 70%, most likely I'm getting my first target. If I'm trading 3 contracts, I'm taking 2 out, let's say with 10 ticks. That covers my stop. If my stop loss is maybe 7, 8 ticks, I can cover it. But let's say that you took that trade long from here. And look at where the rejection is and the next continuation. Automatically, with a glance, you will know where your stop loss is. And I'll give you an example. Is your stop loss going to be here? Red, green, or blue? Your stop loss will be blue. Do you see how small your stop loss is? This is where we excel. Your stop loss is very small, okay? So, and that's how you will be able to understand the market in details. The market exactly behaves like this if you understand how to read the market, the volume profile according to what I'm trying to teach you. It is a process, and I'll tell you what we offer. We offer a members area, full members area. If anybody joins us, you see level 1, level 2, level 3, level 4, level 5, and we just added level 6. I just added level 6. So if that level 6 is new, what I do every morning, and I have students here with me, so they they know. I have students that joined us today in this webinar. They know. Every morning, first thing in the morning, I do a top-down analysis. So I'll bring my, where's my cursor? Sorry. I'll bring my charts. For example, I will bring my NASDAQ, and I will say, okay, folks, I have a level, a price here, and price there, and I'll mark it all on the chart. So I will have levels on the chart. These are the charts that you will see in front of you. I'll have levels on the chart. For example, this was a level on the chart yesterday. Yesterday morning, when I opened my charts, I did my top-down analysis, and I realized this is a level that will bring the market up. And what was my goal yesterday on the crude? It was 49.40. I said we're going to get to 49.40, and this was a 48.60 level. Okay, 49.40 was hit today. However, I was not in it. This futures market did not give me a single entry to get in. Why? And I'll explain. Here's what happens. Remember, we talked about continuation and we talked about rejection. Okay? Not getting into details. This is a continuation zone. Okay? And the crude went into it. Now, 8 a.m., I opened my charts, and I'm 8 a.m. Eastern, and I'm doing my top down. I realized, excuse my language, oh crap, the market left the base, and this is 49.40. It's the top of the continuation. It's going to get there today or tomorrow. I was clear about it. I could not find a trade. Why? Because the market within this continuation zone did not give me any entry with a small stop. So what do? What do I do if I know it's going to go to 49.40? I have two ways of trading this. My way is to trade it in the Forex market. You know the crude is tradable in the Forex market, right? That way, you can trade 10 cents per tick or $1 per tick or $10 per tick. It's up to you, right? You can do a mini account or a micro account or a standard account. I prefer this way, mini account. So I can trade 10 contracts, $1 each. That is equivalent to one contract of the standard account. So I can take 5 out, 6 out, and leave runners. So I can at least benefit from it. And you can do it in CFDs as well. CFD, for those, if you're in the States, you cannot trade this. Anywhere in the world, you can trade CFDs. You can have, there's an exact market that it's traded in the spot market in the CFDs. You can choose to trade with a broker without any spreads. Folks, spread is not something that you have to pay. Pay attention. There are brokers that will offer you Forex trading with no spread. You have to pay commission, just like futures. You will pay just the bid and ask spread, which could be half a pip, quarter of a pip, sometimes nothing. All right. So that's, if you want to be successful, you have to do your homework. If you want to trade this, and you can be a successful trader, you can trade. Okay. If you follow certain things. One of them is you have to do the work on your own. You have to be responsible for your own call, for your own trades after you learn. Second, you have to look for without finding any excuses. You have to find a way to make it work, including finding a proper broker, which is, for me, paying. Why do I want to pay 4 or 5 pips spread? That is a lot of money. I would pay just half a pip commission or 1 pip commission, just like futures market. Okay. The other way to be successful is to diversify. Today, for example, and it's been like this all week, and students know this. Students who follow me and they are with me in the room, they know this. We are waiting for non-farm payroll. The market is crazy. And you can see our recaps in our website. If you go to our website, which is here, okay, and I will get to the point soon. If you go to resources, you go to performance, okay, agree, you go to the US session recaps, and each recap has a spreadsheet and a video associated with it. Last month we did full 5-day trials, and the full 5 days are available. This is like 4-hour video each, uncut and edited. You can see as well. My point is, folks, that the market did not give me any trades on gold, crude, but not clear entries. I did not get any clear entries, as I said here. Showed you this example on the crude, on the nothing clear. Everything was, I knew the direction somehow, but there's no clarity then. But I looked at other things. I looked at Forex, I looked at CFDs, and I was able to make some trades. So my point is, diversifying is important. It is really frustrating to try and make money using one instrument. That instrument might be idle for a few days. So why not use the methodology will work on futures, Forex, options, CFDs, ETFs, stocks, everything. Because it's based on volume, not every instrument you can trade. Some instruments don't have a lot of volume to consider or to be clear. So you have to choose. But overall, I look at least 10 different instruments. Okay. CL market, it's available in the CFDs, and I have some students traded in the CL traded in the spot market too, but I use CFDs for that. Okay, I'm a Canadian, I can trade CFDs. next thing I want to bring to your attention is the importance of doing your homework ahead of time and waiting for it. I'll give you an example. Do you see these arrows? These are from my, sometimes from immediate top downs. I would do short term and long term. But I'll give you an example of today, or some of the things that you learned. Do you see this box here? For example, this is 2 days ago. This was a box where I realized that it's a do or die box. Sometimes the market will come to the box, poke it, go lower, and go back up. You don't find entries. It's fine. It's fine. Often, if you're patient enough, you will find that trade. Why do I want to get in a trade? And I'll give you the same example. Why do I want to get in a trade when it's completely missed? So the market goes down. This is supposed to be a rejection below. Here's a rejection, for example, R. The market goes to the rejection. I missed it. One of the ways that I'm doing not to miss trades is to have a line here already close to it, the line that will notify me verbally, and I will hear it. So, but let's say I don't have that line there, and I am looking at different markets. I miss it. The market bounced down, and it went up. I know I missed it. I missed a great opportunity to go in with a very small stop, because my stop loss will be just very small here, just like I explained in my previous. Now, what do I do? What do I do next? Let's assume this is 1 hour chart. I will break it down to, let's say, 233 tick chart. I trade tick charts as well. I love tick charts. You can do range charts. And once I break it to a range chart, this volume profile, it could be, all of a sudden, it could be dissected into small volumes and rejections, like this. And you will see them. And they will look like this, because now you're dissecting a large market, a large frame into a smaller frame. So what would I do? I would grab my charts and I will say, okay, the market, we missed it. It went up according to this view. But according to this view, we still have a chance. I wanted to go into the continuation, and I wanted to come back down to this first rejection. We call it a hiccup, and then back up. How many of you today with me in the room saw me plotting my trade ahead of time on NASDAQ? And I'll tell you what happened. NASDAQ, I was looking for a short. How many of you in the room with me today? And this was a rejection zone right here above it. Okay. NASDAQ, and I made a video out of it. I explained it. In the room, the NASDAQ came down, went up, poked, came down, and now I'm looking for a short. I said to everybody, unless, and I plotted that, I said, unless it goes back down and then up, I'm not taking that trade. Why? Because if I take it from here, my stop loss is supposed to be 2 points, just above this. If I take it from here, my stop loss will remain here, so that is another 3 points. So my stop loss will be 5 points. Why do I want to risk that? And true enough, the market bounced from the line that I posted, and it came down to the next level. It is very, very accurate. It is very, very soothing, relaxing, and you will be forced to wait. Often when people come to my room, they will say this is a very relaxing environment. Why? Because I am not interested in trading a level that is gone. It's already missed. I don't want to do that. Why do I want to do that? The risk is high. I'm not willing to take trades just to entertain you. No, this is not entertainment, folks. This is pure education, pure learning, plus you see me do it in front of you, so you believe in it. Some of the indicators that we use, and I promise not to talk about indicators other than, focusing on This could be easy. This could be done if you follow the logic of the volume profile. But some of the indicators that we use are these. This is a, do you see those dashed lines? Let me clean up the charts. You see those dashed lines here? The dashed lines are, they're called magnets. Magnets, remember we talked about the footprint bid and ask ladder here? I said there's a formula that I discovered. So this formula is embedded inside the indicator itself. And the indicator has a built-in, pay attention to this please, it has a built-in footprint. So there's a footprint like this embedded inside the indicator. And the footprint the indicator will go and read all these numbers, millions upon millions of numbers, and will plot that specific formula on the chart. Now on this chart, if you look at this, I have indicators. On this chart, I have four different charts. Look at this. I have NASDAQ 144 tick chart, NASDAQ 5-minute chart, NASDAQ 15-minute chart, NASDAQ 3-minute chart. So 30-minute and 15 considered long-term for our immediate trades, and 5-minute and 144 considered short-term. And all these charts are embedded in one chart. So I have 5 different charts inside this chart, and 4 different charts inside this chart, and all of them have a footprint. So when I have a single line, see a single dash line here? Do you see it, folks? Single dash line. It comes from one frame. Single dash line, one frame. It could be a 5-minute. I can go to the colors and find out which one it is. See gray, dark gray, light gray. But sometimes you will have double dashes, one on top of other, such as this one. See this? Maybe you don't, I don't know if you see it clearly, but this is 2 lines, red and gray. Red and gray on top of each other. So this is a very important profit target for me if I want to hold a short. This is a magnet, the name magnet. It's a very important profit target for me if I'm holding a short. Now, am I taking a trade based on this? No. I am exiting a trade based on this. That's a target for me. But I'm always getting in a trade and finding my stops according to my volume profile that I explained. And final targets usually is according to volume profile. But if the volume profile coincides with this, and I might take more profits here. Okay, so that's how I deal with this. The other indicator is our dynamic reversal level. Today, in the room, I took a trade from a dynamic reversal level. I will try and show you if I can get a chance to. Leave it. No, maybe I'll get a chance to show it or not. I don't know. Let me see. Today was a tough day, and I decided to make a video out of the training, and I called it Tough Trading During a Tough Session. It's a 22-minute video, and I explain a lot of things. So it will be available by tomorrow to all students. 10 more minutes. I thought I finished at 3. I'm sorry. So never mind the video. I'm very sorry. I thought I finished at 3. Anyway, I was told I have an hour and a quarter. So that's being said, let's go back to the dynamic reversal level. Dynamic reversal level is an indicator. I'll be very quick. Imagine you have 5 indicators. 5 indicators. All of them are very strong. based on volume, for example, very strong. You don't know which one to honor, but you have all 5 of them. But sometimes at least 2 of them, 2 of 5 coincide, or 3 of 5 coincide, or 4 of 5. They will show the same level, same price. Do you think that's a good level? Yes. This is where our dynamic reversal level indicator comes in play. That my dynamic reversal level shows me that on a 30-minute chart, you have a huge support. On a 45-minute, it shows me it's a. This is very, very important. Today we took a trade from the dynamic reversal level, but it was based on volume as well. It was a rejection level on volume, and we also have power lines. Now, I have time. I'm sorry then. Okay, I have time. Very good. So the other indicator I want to show you quickly is our power line indicator. Today, the NASDAQ, let me show you the NASDAQ and I'll show you what happened. Today, NASDAQ daily, somebody asked me, why did you call that trade and why did you take it? I took a NASDAQ trade today in the room, and it is in our daily. Today, you see this power line indicator? This is a line here, the green line. Today, the market bounced from 4881 area. It gave you a good bounce, a very nice bounce. It ended up going higher afterwards, but it was a very nice bounce. It was from the power line indicator today on the NASDAQ. And if you, is it on my YouTube? It is on the recap today. If you watch the recap, it's in today's recap. But power lines, look at this power line indicator holding. What are power lines? Power lines are similar to trend lines. They look like trend lines, but they are not. I call them power lines. They are a mix of a couple of things. Anybody knows fractals? If you know fractals, so this is a mix of fractals and a mix of, if you look at this, not this one. I will show you something else. I will show you another chart. You see CL? End of buying, end of selling. What is end of buying, end of selling on the tape? End of buying, end of selling is when you have declined numbers of amount of contract, declining numbers, and then all of a sudden a gap, which is a 0. For example, let's grab an example here. There's many examples where you have declining numbers and then a cap. We call it a cap, a 0. 163.43 example. See, 387, 163.43. So when this, I don't look at this. It's an automatic indicator that look into it. 138, 102.67, and then a 0. So declining in amount of number of cells, and then a 0. That stops the market. We call it capping. So if that combines with a fractal is when you have a high with 2 lows, 2 lower highs on each side at least. Again, you can look it up. Then that will give you a dot, and that dot will grab the other dot and will grab a line, and you will see these are very powerful. You can use them on a 5 minutes. You can use them on, and here's an example, 60-minute power lines. Let me get rid of the profile so you see. You see how many times the market stopped here? 1, 2, 1. It stops. 1, 2. And of course, what you can do is simply you can work it in a way that it matches your needs. And I'll give you an example. Let me get rid of the volume profile here. You go to your charts, you go to the indicators, you bring a power line. You bring a power line indicator, new, and you can do it as follows. If the price breaches my power line more than 10 ticks, I want that power line to, if it closes below the red and above the green by more than 10 ticks, I want that line to go away. And I want to go back, let's say 100 bars. Apply. Give it 2 days. It's NinjaTrader, so I'm joking. Okay, now we have power lines. It goes back only 100 days. See that? So power line, sorry, 100 bars. But these power lines, this is just an example. Okay, you can go back, and these power lines will hold the market for a couple of ticks or for more than a couple of ticks. Sometimes it depends on the size of the chart. It holds it for a long time. But these power lines are extra confirmation for your trading. These are not how we get into the market. The base of our trading always is dependent on volume profile, that is. Okay, so going back, we offer 1 week. It's not free nowadays, it's $1. So let me change that while I'm doing this. 1 week, 1 trial, $1 for $1 access. So you can join us for a full week as long as we know who you are. Okay, and we decided for the past many years we have been offering trials for free, unlimited trials. But we decided to do $1 so we know who people are. Are you tired of looking for someone to call trades for you? Yes, I do call trades, but I cannot call trades and trade for myself and support you and answer your questions at the same time. So you have to, at one point, to learn this on your own, which I do every day. So besides being a member with us, my membership is for life. There's no, you don't pay any extra, and the pricing depends on the offers we offer. Every month is different. Just contact sales at the Trader Institute. Every month is different, and we offer very, very steep discounts. But I'm not here to sell. I'm here to invite you to our trial. You need to take matters in your hands. Pay attention to your pension, really. We have the ultimate package for you. And here's one of the things that most people don't realize, and I mentioned it today. Markets change, right? Markets change. It's not unfinished business, Norman. No, it's far from it. I don't believe in unfinished. Actually, unfinished business, Norman, is something I really love, but it has nothing to do with the tape. It's with the volume. Okay? There's a lot of unfinished business in the volume. That's why I'm anticipating tomorrow, or so on Friday, if we have good news on the non-farm payroll, that the market will crash. Yes, you might laugh. You'll say, good news and the market crash. Yes, it will crash if you have good news on Friday. If the announcement comes with at least 50K and more positive, with no revisions for prior, or even if the revisions and the prior are revised higher, the market will crash. And there's a lot of levels. Now, you need to know that I give you every week, every Sunday, before the market opens, I send you, if you're in my list, I will send you my weekly projection alerts. And my projections often hit early week. For example, if you read my projections, which I sent, and I will get back to the subject, you get these projections if you register. Okay? look at my projections for this week. I said, I see 50 on crude. 50! Look where the crude ended. 3 ticks shy from 50 today. How do I know this? And if you go through the projections that I give on Sunday before market open, you have a lot of them, and compare them to those days and those weeks, you will really like them, okay? I recommend, really, Ivan, to come to the trial for 1 week. Okay. There's a question. Richard's asking why volume is meaningful when a lot of it goes to dark pools. It doesn't, Richard. There is a difference between saying it or believing or just assuming, and the difference of seeing it. If you come to my trial, okay, if you come to the trial, and if I tell you time over and over that the market is going to reject from this price and come down, and if I tell you next time, I will tell you I have a level here, and this will be the bottom of the day most likely, and the market bounces from it, and I will tell you the last target is here, and all based on volume profile, will you still believe in what you just said, or you will believe in what you see? True? I'm not saying anything against anybody, but don't assume, please. See it for yourself and then decide, because I don't think, from my perspective, because I traded it all. I was a professional news trader. I built a machine that will click buy and sell on the news, and that machine was hooked to a news feed from Reuters News. It will read the numbers and it will click buy or sell. I traded Fibonacci's, I traded the tape, but all of it does not mean anything until you see it in the volume. Volume will tell you exactly what happens. Sometimes I will sit a whole day without a single trade, and you will see the market going back and forth like this. Nothing, 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 nothing. Okay? Because I see it ahead of time. So if I over and over throughout the week, if I show you those levels, okay, if I tell you these levels are going to hit, or this price will go hit, or I have nothing here, or I have something, if you see it for yourself, then that's a different story, right? Now, if you come to the trial, there's a lot to be answered, really. And if you register, if you go to our website, I highly encourage that you, as soon as you open, sign up for our newsletter, please. And I don't know how to do that, Eugene. Do you have a link? Our newsletter? I think you will get a pop-out window asking you for the newsletter. Okay? So the ultimate package is full education, which I showed you. Let me show you again. If you go to our web, you will get access to this new. If you join us this month, first you will get access to the old members area, not this one. The old members area, and maybe after a week, because this is still in the process. Most students are on it, not everybody on it, but after a week I will give you access to this too. I just need a few. There are a few glitches, including the links. The links are trade room links are not always showing. No, they're showing now. But I can email you the links anyway. So I will give you access to the old membership, and you can start your education. The membership is for life. The trading rooms that we offer now, this offer that we're going to have for this week is going to be for life. There's one payment only, or maybe a payment plan for maybe 2 payments. My obligation is to teach you how to trade, and that's my promise to you. I will teach you how to read profile. I'm spending 4 or 5 hours a day in the room, besides members area that you will have all the videos. I answer your questions. I always make new videos. Okay? You don't have to buy anything. You come to the week. The maximum you lose is $1. And even if you want your $1 back, I'll give it back to you. It's not a big deal. After the week, you decide. If you can decide during the week. It's up to you. And you can cancel at the end of the week. It's up to you. Again, I'm not going to ask anybody to buy anything, Joe. You pay $1, you access the trial. We give you the links to the trials. So full educational members, educational members area with tens of hours of recordings, 3 live trade rooms, 3 instructors at this time. We have 3 instructors, myself, Eugene, and Jay. Forex, futures, options, CFDs. It's a combination of 8 hours daily for your education. If you have a father, a son, a wife, a brother, you want to join together, let me know. We have a special package for those. I do top-down analysis every morning. Jay and Eugene, they do their levels on top-down every evening, and they are with me in the morning too. Proper approach, proper attitude. When you are with me, sometimes you will be bored. But again, I'm not here to entertain you. There's nothing in the market. You better ask questions and try and get me involved in educating you during the slow times. And I keep saying every 5 minutes, folks, we don't have anything in the market. We have to wait. Any questions? You better, ask questions. Multiple ways of benefiting. Multiple ways. Hector is asking how much is after 1 week. I have not decided yet on the price. Regular price is just under $9,000. Okay. Now some of you will be scared up, but we offer steep discounts during the trials like that. We don't have London session. We have Asian session. We have morning session, and we have afternoon session. All morning from 8 a.m. to 12. Afternoon 1:30 to 2:30, 1 hour. And if the market is dead, I just don't even go. We don't even open the afternoon session. But 3 times a week at least you will have the afternoon session. For example, today I closed the morning session at 12 or 12:10, something like that. Then I took a break because I'm doing this webinar. And you have Skype room. For now, you have the Skype. We have 2 Skype rooms. One of them is for swing trades, which students will share trades together, and I have about 300 students in it. And the other Skype room is for tech support. So if you have tech issue, you need to ask students. Some students are better than others in installing this, setting up this, asking about this. Then they help each other. Okay. Again, you will not know exactly what we offer unless you attend the trial. So please attend the trial, pay the $1 so we know who you are. And again, when you trade, when you think you know how to trade volume or you know how to trade the tape, again, allow me to be very specific and very straightforward. I've been doing this for probably 14, 15 years, and I have a lot of students with me. So when I am saying something, I don't mean to insult anybody. I'm telling you out of experience. If you're trading the tape, the bid and ask ladder, and you think you know it all, you still keep losing money or you're not getting anywhere, think about it. Change. Try and look at something that is meaningful. Okay? Volume is key to everything. Avoid manipulation. Avoid the numbers. For example, do you know traps? Anybody knows traps? Do you understand traps? This now, what I'm going to tell you now, is very important. Traps is this. Institutions, stop hunting is overrated. I'll tell you, Richard. Institutions want to trade, let's say, 100 contracts, CL. one institution. Do you think they can get their 100 contracts filled and they want to go short? Do you think their 100 contracts can be filled within 2-3 ticks? They want to trade, 1,000 contracts. Absolutely not. It will take them 15-20 ticks for it to get filled. Now, what do they want to do? They want to get filled within 2-3 ticks because they want to take 1,000 contracts and make 5 ticks and get out, for example. What would they do? They will push on the tape. They will push buyers, and you will see all of a sudden you will see dark green. And somehow somebody taught you that dark green. When you see dark green, you go long because it's dark green. This is when you talk about dark pools, when you talk about fake entries, that you see dark green. Oh boy, Mr. Smith showed me and taught me how to, it's dark green, let me go long. So you go long, Richard. Don't take it personal, but you go long. You do 2 contracts. Hector will go 5 contracts. Joe will go 10 contracts, etc. All of a sudden, there are 3,000 buyers. 3,000 buyers. Guess what? They're selling their 1,000 contracts very easy. Therefore, you get in long. It stops. Excuse my language. Oh, excuse me. It stops. It reverses. Boom. And you are wondering what happened. Why? What happened? Because this was a flash for you to go in long. Meanwhile, they wanted to go short. So they filled their contract within your 3,000 contracts that we just became victim of. So they got filled within 2 ticks. Done. Okay? Do you understand why the price will go sometimes down? And immediately, within milliseconds, will go fast, and then will come back down. And that level, for example, it could be a Fibonacci level, Fib 62%. Meanwhile, it doesn't hold. It held for a few ticks, and you will say, oh my God, look, they are absolutely right. The Fibonacci level 62% held, but it only held for 3 ticks. How can I benefit from this? You can't. Do you know why this happened? Because machines and institutions are programmed to take profits here on the short, for example. Once they take profit, what's going to happen? The market will bounce for a few ticks until the trend continues. So you cannot trade when the market is behaving like this. This is profit taking for them. Don't become a victim of these things. You have to learn. You have to anticipate your trade ahead of time. Therefore, folks, my methodology is anticipate, confirm, execute. Anticipate, confirm, execute. That's how you have to anticipate the market ahead of time. That's why when I trade, when I do my top-down analysis, I'll put a line on chart ahead of time. I'll say, folks, I have a short, pound New Zealand short, for example, today. This is my entry. This is my stop loss. This is my profit target. You see how the market bounced immediately from this line? Anticipated it? No, actually, the entry was here. It gave me first target. It went up, but it's still coming down. And it was right in the part of the education today that we did. Where is it? I don't trade Forex in the chart trader in the room. I don't do Forex in the chart trader. This was part of the trading today. Let me show you the New Zealand. Where is it? Just give me a second, okay? I'm just looking at it. Oh, look at the trade on NASDAQ I told you about earlier. This was a DRL trade plus besides the volume profile. But let me go on and show you the trade on New Zealand pound. Okay, here. Okay, pound New Zealand here. I told my students This is a bubble. I want the market to go back up, and then I will take it short. And look what happened. Look at that. I'm waiting for the market to go up. It did go up. Look, it did go up to the bubble. I took it short. Look at my profit target. You see that? First target was filled. And then it went against me a little bit, but it continued down. See that? And I was asking students, are they still in it? They took it, they whatever. So you see that? So part of what we do is to look at the markets. Oh, by the way, that trade call, although I don't take it on a chart trader, but it was, I verbally call it, I put a line, and also I type it. So no excuses, okay? There's a lot of outside influence. There's a lot of, I would say, people who don't understand what we do. They just assume. They just assume without coming to us and learning or even attending our trials. They would assume. Well, don't assume. So to kill those assumptions, I will verbally announce it to students, and I will also put a line and type it if I don't take it on a chart trader. If I take it on a chart trader, there is a different story. One of the trades today that it was a massive trade that I took, that I missed, was this one. You see this line? 4882, which I showed you earlier on NASDAQ. 4882, I said I'm taking that trade. The market gets to it, gets to 4882, and I click on my, I'm going short. My account did not activate. I had the wrong strategy. So the market did not, you don't see it in a chart trader, although I was ready to trade it, but I missed that trade. But it goes for nice 6-7 points. It was an amazing trade. I would have taken my profits, but it didn't happen. Overall, it's a methodology that you need to pay attention to. If you come to the trial, you will enjoy it. Your stop loss strategy. Okay. Stop loss strategy, that's a good question. I'm not going to go into details, but if you know that there's a trade short that is from here, and because you have a rejection level right here, and the rejection level is followed by another continuation, and you're looking for a short for overall the sentiment of the market of the day, I said it's a short because it's overall it's a short trade, short market. Are you going to take trade from here? D. Of course not, because you have to wait for the market to get up to this rejection level, regardless of what it is there. It could be a Fibonacci level, could be a pivot, could be at top of the channel, bottom of the channel, whatever the case might be. That is your best case scenario. Why? Because there's only a 1.5 risk. Your stop loss is here. So if you take it from here, your stop loss is still here. Take it from earlier, your stop loss is here. So why do I want to take it earlier? I would be patient. So there's a lot of patience goes into this. You have to learn how to do it. And here's my alarm telling me that I have only 5 minutes left. Okay? Any questions? If you can avoid big stops and be able to see trades are 50%, if you know your trades are 60%, 70%, 80%, sometimes more than 80%, what kind of trading you will do? 50%, 60%, 70, or 80? I don't do anything below 70. I don't do anything below 70. Anything below 70, I tell my students, folks, I think it's going to go up or it's going to go down. I'm not going to take it because possibility is less than 70. If you want to risk your own money, go ahead. everybody's free of risking whatever they want to do, risking whatever they want to risk, not me. So while they are watching me, they get to that point of, you know what, patience is key. Any questions? I'm done. Hope you enjoyed the session. And this is my mission. I've been doing this for a long time, and I'll continue doing it. I have a large number of students base that depend on me. Some of them don't even need me, but they just come into the room to get that sense of calmness. They get that sense of, you know what, you have to be patient. There's nothing on the market. A lot of students will ask me, what do you think of this instrument? What do you think of that? So we do together a top-down analysis on it. It helps a lot. Thank you so much. Have a great day. Don't forget to register to our either newsletter or email us. You have our information. We are the Traders Institute, thetraderinstitute.com.